And joining me now for a broader look at this afternoon's market performance is Lwazi Matekana from Nedbank Private Wealth. Lwazi, thanks so much for your time this afternoon. Another short week for us. We are seeing sentiment pretty upbeat, if I do say so myself. It seems like there's progress when it comes to the trade talks front. What have you made of, I guess, the messaging and the tone coming out from the US and China as well? Because on one hand, we have the US saying, they'll be backtracking on those tariffs. On the other hand, we have China saying, no one has approached us for any negotiations as yet.
Thanks, Ndawling, and good afternoon to your viewers. So, look, it's a bit of a difficult one because you are seeing the art of the deal taking place in live time as we watch the US backtrack. The one major thing that we are seeing is obviously there was an Ipsos poll yesterday that came out. I saw something on the wires about Donald Trump and how his favorability is declining. And we know that US politicians are quite sensitive to public perception. So that's one of the things that's taking place. It's a bit of game theory, if you want to call it that. China's holding steady, waiting for the other player to start defaulting on or reneging in whatever they've said and put out in the public. And we are starting to see the US, particularly President Trump, walking back his statements. There's pressure from companies in the US. I mean, we saw Apple talk to the White House asking for exemptions. Many more companies are coming to the fore asking for exemptions again. Or else they will pass on these increases to consumers, and there's consumer angst obviously within the population within the US. So we are seeing a kind of backtracking from the US, which will exacerbate the need to actually have a deal done. And hopefully we get that sooner than later.
And I mean, he even had negotiations and talks with retailers last week as well. I think Walmart part of that as well. We're also seeing some relief coming through on the automakers side. Some reports saying that Trump is set to backtrack on those auto tariffs or soften those duties on that front. But it looks like this will only apply to cars manufactured in the US, right?
Yeah, sure. But the component parts obviously have to come somewhere. The assembly takes place in the US, and we know, again, those component parts have to come into the US, and then those import duties start taking place, which will affect, obviously, the margins for the car makers in the US as they do the assembly and distribution within the US. So we're going to start seeing a lot of these companies come to the White House and say, look, if we don't deal with the tariff story pretty quickly and decisively and get to a deal, we're going to start seeing escalating prices, which is artificially created inflation, if you want to call it that. And obviously that will then impact US economic growth, will impact consumer sentiment. We've got consumer sentiment numbers out of the US, I think tomorrow, that are coming out. And we know the US is a demand-driven economy. So if consumer sentiment starts faltering, you will start seeing a slowdown in the US economy. And that would not be good for Trump and the promises that he made on his campaign about bringing jobs back to America, about making Americans wealthier, making things affordable. So there is an issue around that, but we will start seeing these pressures building up on the White House to actually get a deal done.
Let's take a look at what's been playing out on the company news front. Big tech earnings are in focus this week. We have numbers out from Microsoft as well as Meta. Just your expectations on that front. I mean, last week we got numbers from Alphabet, and those numbers were pretty good, and I guess setting the tone for these tech earnings season.
Yeah, sure. So with these first quarter numbers, I do anticipate that for most of these companies that will issue earnings releases, you would expect most of them to be within guidance or beat analyst expectations or the street. These numbers are backward looking.
Yeah.
So the most important thing when getting these earnings outlooks is what the guidance is. Do the companies keep the guidance going forward, or do they adjust it lower? And with retailers, we have seen some of the retailers start guiding a bit lower with respect to earnings going forward. The tech companies, they've got their own issues. Alphabet's got issues in Europe. They're getting fined. This is a tit for tat, call it political gamesmanship with the result of tariffs. So those kind of activities taking place within their space will affect margins and will affect earnings going forward. And again, it exacerbates the pressure on the White House to actually start getting a deal done and getting this thing bid, so that everyone can move on to understand the normal environment of operating within this new call it version of the world we live in.
And back at home, we had a trading update from We Buy Cars. They are forecasting core earnings growth of between 24 and 28%. Now, this counter really doing well on the JSE since it listed. What was your reading of that update, Tulazi?
Yeah, look, I don't think the market was really. It was quite ambivalent to the trading update. I think the stock is down about 2%. One of the reasons that I think that's the case is because if we look at the previous corresponding period, those numbers were affected by accounting charges. So accounting adjustments in particular, so non-cash charges and once-off transactions. And the market's probably looking at those numbers saying, well, this is not an operations-based result or outcome. It's just a normalization of what's taking place. But it does sound good on the face of it. If you look at, I had a look at NUMSA numbers for the first quarter of 2025. The new vehicle sales market looks like those numbers are up 20% year on year. So there should be a read-through to the second-hand market, which is a market that people use as a substitute for not being able to afford new vehicle sales. So going forward, we could see some good buoyancy within the local, call it new vehicle sales market and the second-hand market. However, I don't think the market is looking at these results or the trading statement that came out this morning as an operational-based trading statement, just a fixing of accounting adjustments, which makes those numbers look a bit rosier.
All right, Lwazi, let's hit pause on the conversation before we get to your stock pick. Let's reflect on some counters that have found favor with your industry peers.
We like Bidvest here. The share has underperformed quite significantly. It is considered to be a play on the South African economy, but they do have a reasonable amount of business service operations in other jurisdictions in the UK. They are not significantly impacted by the trade war. I think there was maybe concern around their freight business, but most of the products that they'll be exporting are exempt from tariffs. The maize crop looks like it's going to be good, so there could be further exports there. And we're still reasonably bullish on the medium-term prospects for the South African economy, which they have a strong exposure to. They've said if there's goods inflation, it is broadly positive for their business in terms of underpinning sales growth. So, and the valuation looks reasonable. So it's sort of a play on SA Inc. with a little bit of offshore exposure and at a reasonable valuation here.
The Chinese economies, the X-Tracker CSI 300 swap, the London line, and that's particularly because of the fact that since the recent sell-off, there's been quite a lot of value that I've seen on the Chinese market. And I think taking the top 300 in Shenzhen and Shanghai Stock Exchange, if you don't know exactly what's happening in the economy and you're just genuinely taking a play on the fact that there's been a recent sell-off in that market, this is a good entry, and I think right now it's where the next pockets of growth will be coming from.
So Kia betting on China with that ETF, and Rowan going with Bidvest. Your analysis on those counters?
Yeah, look, Bidvest has re-rated quite a bit since last quarter of 2024. I mean, the stock was trading around 290 odd rand, call it October, November. It's currently trading around 230 rand. It's a good beta play towards, jurisdictional growth, if you want to look at it from that perspective. So South Africa, Inc. growth, you'd find industrials are correlated to economic growth within South Africa. Bidvest also has operations in UK, Spain, and Ireland, I think. And if you want exposure to those jurisdictions and that growth prospect there, it's a very good stock to own. And also, obviously, on the macro cycle, industrials are stocks that you want to hold when the macro cycle starts turning, moving upwards. On the China story, I mean, there's a lot at play at China. We currently know that the trade war will probably subdue performance within Chinese stocks. But what we've seen in the last 12 months, obviously, China's call it tech index, the Hang Seng Tech Index, has done pretty well. It's up 35% odd to 40% for the 12 months. It's currently up 12% year to date. So if you're looking at undervalued play, China is looking quite healthy relative to peers and also relative to developed markets from a valuation perspective. And also, just we know that Chinese call it officials have not shied away in intervening in that economy to make to bolster the economy. So there's also that. So yeah, I would agree with either or as a speculative play into China. we do like Bidvest because we do hold it for our clients.
All right. And where are you seeing opportunity at the moment? What's your stock pick?
Yeah, look, I'm a bit more of a conservative person. Currently, you can't see the trees well, you can't see the wood from the trees currently, so we are still waiting on normalization in global growth in global economy. So I would stick to a defensive type of share like bats. Most of these industry companies are more ambivalent to macro cycles. They generate cash, they pay it back to shareholders, and you want to hold something like that will give you income throughout the cycle and doesn't really move in very high divergent moves within the cycle. So I'd hold the bats for now and then wait until you start seeing a turn in the cycle to start getting into the industries that will start popping once the cycle turns itself.
Lwazi, thanks so much for your time and just taking us through analysis of trade at midday. That was Lwazi Matekana from Nedbank Private Wealth.